Hey guys, welcome back again. So basically, in this section, we're gonna be talking about indicators. So in terms of indicators, we are very choosy. We don't use every indicator that we come across. No, we use only specific indicators and for specific purposes only. Otherwise, we use what we know, which are market maker cycles, and then what else? Technicals and fundamentals. So, but then in terms of indicators, the indicators that we use are not custom. They no, actually they are custom. They come with the market makers template. So there are no other external indicators that we put inside our charts, except the tools that comes with the MetaTrader, which are the Fibonacci and the what do you call it? The shapes, which is the triangle, the rectangle, and the and everything else that comes with MetaTrader, basically the tools that you know what I'm talking about. So the most important moving average, moving actually indicators that we're gonna focus at, it's exponential moving averages, it's the TDI, the ATR, and then the work time. I call it the work time no auto GMT. That's one. It comes with the market makers template. It's an intraday trading session indicator. Shows you when it throws when the London session is in play, stop hands at the Asian session and the New York session. So otherwise, without wasting any time, let's get right into it. Going to moving averages. So basically, we use moving averages as dynamic support and resistance. I'm gonna assume that you understand when I'm talking about dynamic support and resistance. I'm talking about the moving support and resistance, because moving averages they're not fixed. They tend to move along with price. As price goes up, they go with it depending of what number the moving average is. So we use different moving averages for different purposes, but then we use them, number one, for dynamic support and resistance, because moving averages moves along with price, whether it's going up or it's going down. Secondly, we use moving averages as entries and exits. We call that moving average bounces. And then thirdly, confirmation of trend direction. You look at certain moving averages, where they pointing, which crossovers do we see on the charts, on what time frame, and then that concludes where the direction of the trend is. Maybe regardless of whether it's short term or long term, you'll just look at the certain time frame and look at those moving averages, whether they've crossed over, and then how do we see bounces, which moving average is moving really close to price, and so forth. So we can confirm where the trend is going, whether it's bullish or bearish, just looking at moving averages. You can also use moving averages for level count for certain crossovers. We know when you have 15 to 100 moving average crossover, we call that, we might refer to that as level 1 crossover, maybe from anchor point, which could be the highest uh, price or the lowest price of the week or month. From that point, if you get 50 to 100, that's a level 1 crossover, and then 200 and 800 is level 2 crossover. So, but I'm gonna show them to you properly. And we also, what we have, a systematic moving average crossover in time frames. So, like for instance, you should know when you see a specific moving average uh, on certain time frame, you know immediately there's another moving average at another time frame. I hope that does not making sense. Okay, let me just go to my charts and show you what I'm talking about. But then the most important thing that we're gonna focus on right now, it's moving exponential moving averages, and then as we proceed, we're gonna incorporate in Fibonacci, then TDI, and then lastly ATR, and then the work time noted GMT indicator. So without wasting no time, let's go to our charts there. Uh, Actually, I had some things open here. Yeah, because remember, we're only gonna look at intra-week cycles. I don't wanna look at. I don't like looking at very small uh, cycles. For me, it's like looking at a microscopic vision of something. No, no, no. It's either you go big or you go home. We wanna enter here and then exit there. So first things first, I wanna show you a systematic moving average crossover, and how you can be able to re-enter and then look at it, looking at just moving averages, nothing else but just moving averages. And then remember, when you look at moving averages, you wanna look at them from your highest possible point, which is the Tuesday, Wednesday stop hunt, or the Thursday, Friday reversal. You understand? From any high point, that's when you start looking at your moving averages, whether it's crossovers or not. So, uh, I want to look at a yeah. Let's look at this one. I think this is a perfect example, because I want to show you a very ideal setup so that you can be able make sure that you'll be able to find the variations of the same theme on other flashcards or other currencies. So systematic moving average crossover, because let me just go back there real quick. I want to show you, we talked about 3, 13, 50, 200, and 800 moving average crossovers. So let me just go back. There they are. It's the mustard, the ketchup, the aqua, mayo, and blueberry. So 3, it's mustard. 13, it's ketchup. 50, it's aqua. 200, it's mayo. And then 800, it's blueberry. So let's get it right into it. Where's that? So there we go. So we're just gonna look at the moving averages, systematic moving average crossover. As you can see, this is the highest point of this chart. So when was this? This was the 5th. So this was Friday the 2nd, and then Monday the 5th, Tuesday, Wednesday. So it was Tuesday, Wednesday, stop hand. So this is a Tuesday, Wednesday, stop hand. So I'm just gonna draw a little something there, just to demonstrate my point. So that's a weekly cycle right there. Just gonna draw my Monday, which is the accumulation phase. There we go. We have Monday as accumulation, Tuesday, Wednesday stop hand. What time was that? Uh, it was between. It was just after midday, so it was London session, not New York Open or London Open. It was during the London session when this happened. So it's okay. Otherwise, when knowing your moving averages, knowing that this occurred, it's a Tuesday stop and high. So for you to be able to have that conviction of taking this position shot, you should first the 3 and 13 moving average crossover as 3 and 13. So let me just do that. Let me just type it real quick. It's gonna be 3 and 13 EMA crossover. Let me just change the color into white. Okay, let me just do that. Yeah, there we go. I'm also gonna go get the eclipse. That is our first moving average crossover, ladies and gentlemen. Just gonna change that into black color, then remove the background. Also increase the thickness to level 2, and there we go. That is our first crossover. The second crossover, it's 13 and 50. 3 and 13, 13 and 50. Just gonna copy and paste that here. 13 and 50. There we go. From 13 and 50, we're gonna go to 15 200. There it is. That is the 15 200 EMA crossover right there. Let me just put that over there. And then lastly, the 200 and the 800 moving average crossover. It's like a story. They tell you something. You just need to be able to read it. So when you're able to read the story that the moving averages are trying to tell you, then you're gonna be profitable. That's one thing for sure. So you don't just want to know a little bit of something. You need to know it and master it. So, oh, I'm sorry about that. So basically, what I know, it's everything that I master. I don't. If ever I know something, I have to master it. I can't just know it partially, you understand? So those are the systematic moving average crossover. The first moving average crossover is 330, the mayo and the ketchup, and then there comes the ketchup and the aqua, and then the aqua and the mayo, and then the mayo and the blueberry. So it's 3 and 13, 13 and 50, 50 and 200, 200 and 800. It says a story here. So after when you see this as the 50, because the first moving average is 3 and 13. So if I'm on 15 minutes time frame, before I make an entry, I need to see 3 and 13 crossover first. Because this was before, this was maybe, if ever this is London Open, let me just put that in. It's not London Open actually, it's during the London session. Oh, actually, it is the New York Open. So those highs that were formed during the London session, but then when the New York Open, when the appropriate, precise time, entry time, New York Open, it gave us a little retest there, support and resistance. So that was our, actually this is a very good entry, because you know how we got a crossover there after we got that bearish engulfing candlestick, and then what the price did, it came back, it came down and came back and retested that area. Actually, it came back and retested that moving average crossover price came down, came back to retest that 13 moving average crossover. So this was a very good entry. You see that you enter, and then you see another crossover trend 13 and 50, you re-enter again. You see 250 and 200, you re-enter again right here. You see 200 and 800, you enter south here again, you go south because it's in line with the trend. But then because this was let me see, when was this? I think this was Friday. One, two, three, four, five. Yeah, I think this. Yeah. So because this was Friday, we were expecting a kind of like a little reversal, but then honestly, I don't like counter trading. So instead of buying it, I would just wait for a very good retracement. Like for instance, let me just wait my Fibonacci here. I would just wait for like 50% retracement, and then the price should come back and retest that moving average there, that crossover there. The same thing that's happened on the 3 and 30. So going back to the roll chart. So otherwise, this is what I wanted to show you. But then the other most important thing that I want you to be careful about, it's the crossovers. You shouldn't get eluded. So in terms of levels, the this is the first level crossover. 15200. This level one crossover. So if I get this thing from the anchor point Tuesday, Wednesday stop hunt, and then I get a moving up at 15200 moving average crossover, I know that's a level one safety trade. So if ever I had taken a position, I wouldn't take a stop and low here. I'd rather take a stop and high because I've already got a crossover. So I would wait for something like this. Then it issues me that I take it, and then price moves 30 pips. I break even. If it comes back like that again, I already have some kind of pending orders on those highs there, because I know it's a very high probability area, and then if ever price comes around those areas, it's not gonna stay there for too long because we already have a crossover. It's just gonna give us, that case of the devil, and then it will just fall like that. So you should know that. And then 15200, that's level one, level two crossover. So right now we know this level two, so we might just wait for price retracement, like that 50% retracement to that level there, because it's Friday. We expect a midweek reversal, and then maybe later during that day or Monday, I don't know, then we might get another opportunity of selling. And then the other thing, before you could make sure that you see everything. Like I prefer drawing my trend lines as well, so that's what I would also do. Zone them out like that, and then look at taking a short position within these areas. Given also that there's also 15 200 moving average there, so it might give us some kind of a bounce. I would also look at support and resistance. Let me just draw a horizontal line there. What do I have there? So I also have that. So this is my previous support, which might potentially uh, turn into resistance, and then which might give me a good entry opportunity going south. Let me just change that into a pink color, and then also remove that the no auto GMT indicator there. So now you can see what I'm talking about. So if ever I'm gonna take a short position, it needs to be well within my criteria, things that I've set for myself for me to be able to take a good position. This things needs to be, my criteria needs to be completed if ever I'm putting it properly. But then, for me to take a shot position, it needs to be around these areas. So basically, I have two possible areas that I might be interested in taking a shot position. It's either from, remember, we're just looking at moving averages. We're not looking at anything and then anything else. But then the other thing is that we cannot ignore subprime resistance because there it is right there. So we're just gonna look at it and also try to incorporate as to how we can be able to take a short position with the confluence of that. So this is the areas that I might be able that might I might feel very comfortable in taking short positions. So let me just change that into a red color, and then so I basically have two possible locations where pride might reverse. So that's it, ladies and gentlemen. It's in line with the trend. It's Fibonacci retracements right there. Let me just do that. It's 38% Fibonacci retracement. 38%, anything between this 50 and 618, it's a good one for me because there's also major apparent resistance and there's also moving averages there. So it's also in line with the trend. So from anchor point level 1, this anchor point level 1 safety trade, because why, there's a 208 15 200 moving average crossover there, then price comes below, it has to come back and retest that same subparent resistance and then retest that moving average is there. uh, and then the other thing you should know that, nah, there's a trick that I want to show you. You see how this thing here is on 15 minutes, and then I'm anticipating, I would love the price to come and retest this 800 moving average on 15 minutes. You know why? Because I know if I have 800 moving average on 15 minutes at a high value area, I'm gonna look at 1 hour. At 1 hour, there should be this 200 should be around the same area there on where there is 800 on 1 hour. So let's go to 1 hour. Okay, my chart is not updated yet. Oh, but actually it is. So as you can see, it didn't come back there. But then we knew that if ever price came back to that level there, we were supposed to have taken a short position because it came to that 200 moving average crossover on 1 hour. 15 minutes, on 15 minutes, it's 800. There it is, 800 there. Let me just put an arrow pointing it going south. Let me just change the size of that. So this is the point here where the 800 moving averages move 800 moving averages on 15 minutes is gonna converge with the actual candlesticks of the price. So which will give us 800 on 15 minutes is going to be 200 on 1 hour. There it is. And then 50 on 4 hours. Where is it? Let me just zoom it all in. And there it is. Do you see that? So there's a confluence of moving averages. If ever the price came to this area, with no doubt I wouldn't have thought twice about selling it. I would enter into a position because it's a proven system. It's something that is proven to be working. So let me just go back to those pictures so that I can demonstrate further what I was trying to show you. So there's those moving average crossover, the 3 and 13, the 3 and 13, and then the 13 and 50, 15 200, and then obviously 800 200 and 800 afterwards. So after just saying this, you can safely take a position here even if it's a very big move, it's a price burst from those lows there. Like market makers, they had enough, so they had already collected more than what they had wanted, so they just burst, like they just run away very quick. So you can also take this position because you got that not the W triple bottom there, if I can call it that, and then it's a Tuesday, Wednesday top, and there's a major support area, and then it's potentially low price of day, low price of week, and low price of month. Because you know why? There's the second week of the month. You understand? So if the second week of the month, this area could potentially be the lowest price of the week, and there's the lowest price of the month. So after having this trend dating moving average crossover, you enter into a position just after seeing it, and then remember, this is 30 minutes. Remember, if ever this crossover we say it, here on 30 minutes, which means that it happened somewhere here on 15 minutes. So whatever that you see on 30 minutes or on 1 hour, it happened on a micro scale on 15 minutes. So before it goes to 30 minutes, it happened on 30 minutes. Before it goes on 1 hour, it happened on 30 minutes. Before it goes on 4 hours, it happened on 1 hour. You understand? It's fractals, everything, levels within levels, time frames within time frames. Everything it repeats itself. You understand? So I hope that is not confusing. It's a systematic moving averages crossover, ladies and gentlemen. This is a level one safety trade. From here, we can even though there is no visible level here, but by just having this 15 200 moving average crossover, we can conclude that price is not coming back to this areas here because it's logged. This is a level one log, so which means whatever that's gonna happen is level one retracement. Then it's gonna go to level two. So this whatever wherever price retraces from this level, it's a log. It's not coming back. It's only going up. Secondly, there is here again the 50, the 3 and 13, 13 and 50, 50 and 200, and lastly because it's going up the 200 and 800. But because we're not sure, remember 200 and 800. It's when we start looking at 200 and 800 moving average crossover, that's when we're looking at a little bigger scale. But then you could just focus on 3 and 13 for like your entries on 15 minutes, and then 15 200 for okay, this is the first one, 3 and 13 for first entries, and then second entries 50 3 and 13 and 50, and then third entries 15 200. Understand? There we go again. 3 and 13, 13 and 50, 15 200, and then lastly 200 and 800. It's a systematic moving average crossover. After Tuesday and Wednesday, because I don't have the patience of waiting for price to confirm that it's gonna go down, but other people have that patience. Like for instance, in this case, this is some kind. This is what do we call that? Is it a spinning top? It's a spinning top type of candlestick because it has a body and the head pin at the top and the bottom, and then you have a bearish a bearish engulfing, yeah, bearish engulfing candlestick. So for some people that's a confirmation. So after we get this bearish engulfing, and then the immediately we also get a 3 and 13 moving average crossover. That's the first moving average crossover starting from 15 minutes, 30 minutes. So that's another entry confirmation. You take a position without doubt, knowing that it's from Tuesday's top hand. And then remember, look at it here. This is potentially the highest price of week and month. It's HOD, HOW, HOM. This price here, and it's also Tuesday. So it's a very good high probability setup. It goes down. This level one safety trade. Like I said, from the anchor point, the highest point, we get 15 200. It's a level one. So when you see 15 200 after from the highest point of the week or the lowest point of the week or the highest point of the month or the lowest point of the month, you know that's a level one safety trade. It goes below, and then you are like it's a level one safety trade, level two. I would consider this as just level two. So it's level one correction, level two, level three. Actually it's 3 days. It's 3 levels in 4 days. It's anchor point, level one safety two. This low is lower than this low, so it's a very good level. Level two, and then a range. It ranges. This is the highest price of the day, so that's the reversal, and then it's level three. So anchor point level one safety trade, level two. I'm not gonna say that's a level two safety trade, but then it's a good entry area taking it short. So the other thing I'm gonna tell you, I don't like in putting a lot of emphasis on levels because they are a little bit insignificant. Like they are what's the word? Inconsistent. They're not like the cycle. Sometimes you'll get 3 levels in 2 days, or a perfect three levels in 3 days. Sometimes you're gonna get 4 levels in 3 days. Sometimes three levels in 2 days. It's you just need to have the variations. You know the variations, then you'll be alright. So because of it already crossed over 15200 moving average cross over here, I already knew I'm buying on Tuesday. So when it gives me that this inverse head and shoulders here, I take it and I kill it. So it gave me 15200 moving average crossover, and then I know it's going up because this was the lowest price of the day, and then it could potentially be the lowest price of the week. But waiting for Tuesday, I know the price might just and give us a pin there and issues give us a low price of the week on this day. So I'm gonna wait for a possible good entry. So after even noticing that the price is, moving along this moving averages here, especially this 200 moving average. I love the 200 moving average. It's always been good to me. So I started doing my thing. 13 moving average crossover. It's a buy. The 13 and 50, another buy. 15 200. It's a level one log, level two log. 15 200, 200 and 800. After when I see this, I don't play. You don't always get 15 to 200 and 800. When it comes, you kill it. Do you see how good how good this crossovers are? You get everything like this, then you know it's gonna be a good sell. So when you get something like this, you just wait for a good re-entry opportunity, and then you know it's a sell. You understand? So moving averages, the they're on point. It's just that you don't want to use them only by themselves. You need to use them in confluence with some things else. You understand? Then otherwise will be okay. This is a kill for me. That's why I'm telling you I'm able to enter right here. So this was a good sell for me. Even this one here. So remember, use your moving averages as targets, dynamic support and resistance. You see how this is resistance. It's like price gave us an inside structure stop and high, came back below here. Price showed us a crossover, this signifying a level one crossover. It gave us a nice retest there, which is on support. This is a previous support, and then now it gave us resistance there. You see how much moving average is a word. What's the word? Let me just go back to the slides there. It's dynamic support and resistance. It's dynamic because it moves with price. When the price goes up, then the moving average follows them behind. So there we go. So it did exactly that. Where we see the same behavior happening again. There it is again. There it is. Support and resistance. This is a very good one. So you could have been able to take a position right here, and then let's see what else. Okay, let me close this one. Go, just go back there. And then let's look at gold, because gold is also nice, and I know a lot of people enjoy gold. So this is what we call whiplash. Is it whiplash? I'm not sure. So there we are. Trend 30, 30 and 50, 50 and 200, and then price really. That's a bounce there. That's support from support. That moving average. That's a bounce. That 800 moving average. There we go again. Support resistance. First crossover, second, third crossover, and then bounce. First crossover again, second crossover. Obviously, it's gonna be another third crossover, bounce. Thursday midweek, Friday midweek reversal. After one, two levels of drop in one, two, three, four. You see how levels are inconsistent, but then by just knowing Thursday, Friday, you're expecting a reversal. You do get moving averages. You do get levels. You do get support and resistance. You do get trend lines. Then you're good to go. There's a very good bounce there as well. That's a very good bounce there as well. It's a good entry. Another entry here. Remember, right now we're only looking at moving averages. 3, 18, 50, like this systematic moving average crossover and levels. It's working, guys. You just need to be consistent, know what you're looking at. Tuesday, Wednesday, stop hunt. The first moving average after stop hunt is 13. So if you like waiting for confirmations, right after this candlestick, this evening star, and then spinning tops, and then information high, tap out, it's perfect. You take it, and then when you see this 313, after having noticing this, and you remember you were able to enter here around those highs there. So after, even when you see this, you still re-enter. You don't smile with market makers and make them your friends. You milk them dry. So you entered small lots here because you were not sure, and then you have not seen the confirmations that the trend is actually reversing. But after having noticing this, you open furthermore five more standard lot positions. Then you let it run. You see this again, you don't close that. You re-enter again because right now you've broken even, and then you've eliminated the risk. So you own free trades. You see, come in like this again. If ever you have that time to look at it at that time, because we're sleeping in South Africa, it's around 3 a.m. in the morning. You take that position again. That's a level 1 safety trade. You understand? You take it again, put 10 standard loss there, 10 standard loss, let it run, break even, let it run. It comes back here. You see that New York Open. This, trust me, this was New York Open between half past 2 and 4. You see this pin. You take a short position again. Put 10 standard loss furthermore. It's a confirmed lock. It goes down. You kill it. You break down. You break even and let it run. Friday, you see that you re-enter again. Right now you maximize because you know this is the last move of the day. You understand? Last move of the day, that 15. After crossover, 15, 200 moving average crossover, price goes down and then coming back and retesting that same 200 moving average, 200 moving average. That's a good, reason for me to take very good position sizes. So yeah, that's it, guys. I think this is very clear. There's another bounce there. Uh, what else do we have? Obviously, Tuesday, Wednesday, stop and high, 3 and 13 moving average crossover, 13 and 50, 50 and 200, obviously going down, 200 and 800. So let's just look at another ones. Before, let me just go to the flashcards. Make sure we've covered the dynamic moving averages as dynamic support and resistance. We also did moving averages, entries, exits. I don't like exiting, out of positions because I'm a position trader. I'm a swing trader, position trader that trades in line with the trend. So I know a trend can go in the same direction for like 4, 5, 6, 7 months. So if I'm in a position and then I got it at a very low price at a very good entry area, well, I'm just gonna let it run. I will I will close those positions manually if I feel that the price is about to reverse, or maybe I will get stopped out on booking profit or on break even. But then if the price doesn't take me out on those first initial moments after opening the position, I'm not closing anything until I actually break even. So I've shown you confirmation of trend direction. No, I haven't gone to that. Came to that level count, systematic moving average, crossovers, and time frames. So I think we've covered this one because I've shown you if you see a 100 moving average on 15 minutes, then you already know on 1 hour it's 200 and on 4 hours it's 800. You understand? And then oppositely, when you see 800 you see uh, 15 moving average on 4 hours, then you know on 1 hour there's 200 and on 15 minutes there's 800. So that's how we go about systematic moving average crossovers and time frames. So level counts, I've covered that between, when you see 15 200 moving average crossover, that's a level 1 safety trade. And then when you see 200 and 800, that's 200, that's level 2 safety trade. Confirmation of trend direction, let's get into that. For me to be able to see the trend direction, I want to see 15 200 moving average crossover. I look at this crossover, I know it's going up. And remember, right now we're on 30 minutes, so let's go to 15 minutes. 15 minutes, this crossover is a little bit below. So let me just 15 minutes. There we go, as you can see. I'm gonna wait for another crossover going down before I enter, before I think of going short. So right now it's confirmed, 313 level 1. Gonna go up, another crossover going up, it's okay. Until I get this, another 15 200, then I change. That's when I change my bias right now. You understand? But then for me, the first moving average is 300 15 200, and then the last is again 15 200 to signify that the trend has changed direction. Let me look at another pair. Let me remove there because when your chart is looking like this, it's not neat. So I prefer to remove everything and then just put them back whenever I want to use them. You see how this crossed here, 15 200 went up until it crosses again. I'm still gonna take it north. So now right now it's crossed again. I know it's going south. The same thing again. We had 50 and 200. It's not just 15 200. It's everything here. 50 50 is 3 13 is 3 13 50 200 and 800 all at the same time. So there's a very huge moving average crossover. Let me just outline that for you. It's a huge one. So I know from this point onwards, I want to take short positions only. So I wait for this. When I see it, I take it down again. It goes down. I wait for this. It comes. I see it. I take it down again. I know until I get another 250, 50 and 200 crossing over to the opposite direction, then I'm still going south. And not only that, because remember, I'm still looking at my trend lines. I have my trend lines there, and then I haven't got it close, uh, break and close above. Until I get a break and close above my trend line, then I'm still going the same direction, which is south. So I'm gonna wait for this. So after I get this, I'm gonna start thinking, yeah, maybe it might actually be time for trend reversal. But then I look for trend 50 and 200. They've crossed over. Now we're going low. Then I leave it. I wait for a re-entry opportunity. Previous support and resistance. I'm gonna outline that. Okay, there's my previous support. I want to see that becoming my previous resistance, becoming new support. So do that. This is how technicals meet market makers. Let me just change that to long green color. So in this area, this is where I'll be interested in taking long positions only. You understand? Because why the price might just come back after having breaking out like that. I let's say it's not like I'm not sure what's gonna happen from here. Because already price is broken above that you see how I draw my trend lines. It's like a zone. It's not just one line. It's a zone. I've zoned my trend line here. So after this 15, 50 and 200 moving average crossover, and then having broken and closing above that trend line, I know I'm going up. So when I see this, I know that people that we are gonna take it short here. So just to be on the safe side, I would rather wait for a breakout because everyone that sold here, you see the how prices accumulated. People were putting stop loss above those highs there. So I would rather wait for them to get stopped out and price come back to retest again, and then I know I'm gonna have my positions here. I'm gonna fill them right here, or if ever I don't, because I know the price is already confirmed that it's going up. I'll just enter. It's okay. You can enter here when the price is going, but this is like coming in late and like chasing the price. And remember, we don't like chasing price. So let me go to another one real quick so that I can conclude this moving averages and move to another things. So as you can see, moving average 15 200. You're gonna let it go up. After you see this, that you start closing. You close, and then you wait again. You see this, take it up again. You see this, you close again. You wait. You see this. When you see them crossing like that again, all at the same time, you take another long position. It's gonna go up. I'm telling you. And then remember, right now we're just looking at moving averages, and remember, you can just take a position because you've seen moving averages crossing over or bouncing. You need a lot of things, but then because already, for me personally, I already have that in my head, so it's not a problem for me. When I see I can also trade without analyzing or drawing anything. It's just they call that naked chart or naked forex. I don't know, but then I've met a lot of people that do that. I was like, how do you do that without even analyzing? So it's people that are consistent. They've been doing the same thing over and over and over and over. Like they can just see it in like it's in like if you can't see it in hindsight, you're not gonna see it in foresight. So when you've studied them, then you mastered them. You will already say without even I know for sure. Let me just prove to you something real quick. Uh, I can tell you this is 38 to 50% retracement. From here, and then remember after this not break above this or crossover. From this low, this is 50% retracement. From this low, this is the 8.2. You know why? Because I know I've done this multiple times. The 8.2 from that low, this the 8.2. From this low, this is 50%. Actually 58 uh 618. But you guess I guess you get my point. So when you've done one thing for over and over a long time, you'll be able to see it even when everyone is trying to whip up their Fibonacci's and whatnot. When I already understand, oh, okay, that's how it is. So in terms of let's go back to our slides. I believe that I've covered everything we need to know about exponential moving averages. And the nice thing, ladies and gentlemen, about our trading systems that these moving averages they come with the market makers template. You don't even need to set your moving averages. Obviously, there's a video on how to set up your market maker template, so you'll be able to customize your template, change colors and the thicknesses and whatnot. But you don't need, when you have the template, you don't need anything else. You just need to use a template accordingly, according to to my specifics. Then you'll be able to use it properly, and then make sure that